Paul Cavey, thanks very much indeed for joining us.
Give the government some confidence. Think about the economy more broadly going well for China. And the more interesting story is you look at TSMC.
Hello everyone, I'm Paul Cavey from East Asia Econ, and today what I want to do is take a look at Chinese consumption. So one of those sort of hot topics, right? Like it's something that everyone's always looking for, the Chinese consumer, and the government's going to take action and consumption is going to come back. And why is this important? Because consumption is very weak. And this again is sort of, if you want these very common wisdom ways of thinking about economies at the moment, one of the things in China is just that consumption is too weak and consumption has fallen since COVID. The consumer is on its back. Consumer confidence is very low. All of these things, savings are going through the roof, like all of that stuff. So I want to address that today. And I'm going to today actually, and in a video in a couple of weeks' time. And in doing that, I want to address two things. So the first of all is this idea that cyclically consumption in China is weak. And actually, I don't think that's true at all. I don't think that's the right way to think about China. I think actually consumption has recovered to where it was, the same trend that it was running out before COVID struck. So there has been a recovery in consumption. So what's the importance of arguing that? Well, for one thing is because it's all about the data, right? So a lot of the problems with the way that people look at the economy in China is that the data that's chosen is not representative of actually what's going on. So I'll talk about some of the data issues today in trying to identify where consumption is from sort of a cyclical basis. Now, this isn't to say that there hasn't been any change in consumption, any change in consumer behavior. There has been. But that change in consumer behavior is less about people spending less in terms of going out and eating and buying stuff. It's more about their savings decisions are different. And their savings decisions are different because before they were saving in the form partly of property, and now the property market is dead. So there is something interesting to say about the consumer in China that does have macroeconomic implications, but it's not as simple as saying that consumption today is weak relative to where it was before COVID. Now, that second set of issues about, the change in the consumer behavior that has happened, the macro implications of that, and then thinking about where consumption can go going forward, I'll talk about that in a couple of weeks' time. Today, I wanted to focus on this cyclical stuff, looking at the data. How should we think about Chinese consumption today? So the starting point for a lot of people in this is consumer confidence. And there's a consumer confidence survey from the National Bureau of Statistics, the official statistical agency in China, which has collapsed. So consumer confidence has never been weaker than it has been over the course of the last few months. So this looks like a very good point of consumption is therefore weak. Consumer confidence is terrible. This should mean something, right? This should have macroeconomic implications. Now, I think this is an interesting point because back when I was working in a bigger company, a much bigger company than I'm working in today, but when I was working for sort of a proper company, if you like I tried to make this point in 2017, 2018, but in reverse. So if you go back and look at the data then, consumer confidence was very strong in China. And yet, one of the things that investors were talking about and a lot of sell-side analysts were talking about was that consumption was weak. Why was consumption weak? Because things like auto sales were falling, because the data in terms of retail sales was weaker. And yet, consumer confidence was very strong. Now, I'm sort of thinking now that actually maybe consumer confidence doesn't really tell us anything very much at all, because back in the day, in 2017, 2018, nobody else was willing to sort of engage with this idea. And sort of maybe the data was more important than the consumer confidence numbers suggest. So, if it wasn't important then perhaps today, consumer confidence being so weak also really isn't that important. It doesn't really tell us very much. It maybe tells us something about, a general level of angst in the economy, but it doesn't necessarily tell us very much about how consumers are actually spending their money. So there's one big thing that people tend to focus on, consumer confidence being very weak. Maybe if you go back and look at the data previously, it doesn't really relate very much to how consumers spend their money. So that's the first point. I think it's probably not very good to focus on consumer confidence. The second piece of data we can look at to talk about this is retail sales. Now, retail sales, again, this is a popular number to focus on. It's actually more easily available than the consumer confidence number, even though it's officially produced as well. Retail sales numbers come out every month. They focus on, Bloomberg, Reuters, everybody covers this stuff. It comes out in the monthly press conference when the data is released. And retail sales have been terrible since COVID, right? They're hardly growing at all, actually, when we look at the official headline numbers in year-on-year terms, which is the way things are published in China. So it does look like consumption is weak. So how can we question that, right? It's an official data source. What's the problem with that? Well, there's two things. First of all, it's important to remember that retail sales is a value number. So this is total nominal value of sales. Why is that important for China today? Because whatever else is true in China, inflation has come down today relative to where it was before COVID. So there is a price impact to think about. And if you take out the price impact, actually retail sales today are very different in terms of growth rates to retail sales growth before around the end of 2019. So one of the stories are here. There's sort of two things within this. One, you need to take out the price impact because it matters. The second thing is retail sales was already slowing into 2019 before COVID hit. So actually, relative to before COVID, retail sales today don't actually look very much different in terms of the growth rate. So that's the second sort of thing to be thinking about, that actually retail sales, like it's sort of similar to where we were before. It doesn't tell us very much that's different. The other thing that's going on here, though, there's a third set of data we can look at. So we've got consumer confidence, retail sales. The third thing to be thinking about is what's happening with overall consumption spending. So this third set of data is a bit more difficult to find. It's not so easily covered in the media. So this third set of data is released quarterly. It's the household survey data, which comes out with the GDP release that the government releases every 3 months or so. So this piece of information is important because it's much broader. So when you think about retail sales in terms of the original figure published by the government, it really only covers spending on goods, right? Which is where people used to spend their money. It was all about going out and buying like furniture or spending on cameras or iPhones or whatever else it might be. It was all spending on goods. Now, the household survey data is interesting and useful because in addition to focusing on goods, it also captures spending on services. Now, why does this matter? Why is this an important differentiation to make? Well, because there's a lot of data, other data suggests that spending on services is increasing as a percentage of the total. So that's actually shown by the household survey data. There's an annual number that the government publishes with the amount of spending on services relative to goods. That proportion is steadily rising over the course of the last few years, interrupted by COVID. There's also a second set of data from the People's Bank of China, which is a quarterly survey of depositors, urban depositors, they call it. And one of the things that survey looks at is where people want to spend their money. Are they going to spend their money on goods, commodities, as they say, or is it going to be spent on services, tourism, entertainment, healthcare, and so on? And again, just like the household survey data published annually, this PBC survey also shows there's an increase in the proportion of money being spent on services rather than goods. And actually, specifically, when you look at since COVID, a very sharp recovery in the amount of spending that's going on tourism and going on entertainment. So when we look at this broader measure of consumption growth in China, actually that suggests, and again, after adjusting for prices, which is important when price inflation has come down, when you adjust for inflation, private consumption growth in China is now back to where the pre-COVID trend would have suggested. So there's no weakness in consumption at all relative to where consumption was before COVID. And actually, if you look at that if you do that same comparison of looking at consumption relative to the trend before COVID in other economies, actually it's more difficult to find economies where that kind of recovery has happened. So consumption it's not to say it's strong. Like there's a couple of economies in the world which stand out. Obviously, the US is one. In Asia, Taiwan is another one, where consumption is actually much stronger now than the pre-COVID trend would suggest. China isn't that far ahead, but it's also nothing like, say, Korea, where there's been very little recovery in consumption at all. So actually, consumption looks in China like it's okay. So a final way of sort of illustrating this point, right, that consumption in China isn't so weak, is to look at sort of a standard way where we would judge consumption in the economy, which is consumption relative to GDP. And this is obviously something, which if you're familiar with China, stands out in a lot of the debate where consumption is very low as a percentage of GDP. That's still true, right? Like relative to the rest of the world, like consumption is around 40% of GDP, much lower than in any other sort of comparable economy. Now, there are some problems with those numbers, and it could be a little bit higher, but the broad point stands, like structurally consumption is low. However, in terms of the cycle and where the direction of travel, consumption in 2023 reached the highest level since 2005. Now, sort of like one sort of criticism of this would be, well, this is because the rest of the economy is weak. And so And if you think about the way the economies work, consumption tends to be more stable than investment. If you're a company and suddenly you've got no sales, well, investment collapses, right? You're not going to spend any more money. Whereas if you're a consumer, you always have to spend on food. And so consumption tends to be much less volatile than other bits of the economy. But the point is that this is in the context where consumption has recovered the trend of pre-COVID. So this isn't the situation where you're where the rest of the economy is, consumption is weaker. Consumption looks like it's stronger because the rest of the economy is so weak. In China, consumption looks like it's okay. And in that context, it's rising relative to GDP to the highest level since 2005. It's not a particularly high level, but again, the direction of travel, I think, is important. So I think, in all of these different ways, when you think about the data, we shouldn't think too much about consumer confidence because it's very unclear the relationship between that and consumer spending going back through history. There's reasons to doubt retail sales being a very good indication of spending, given that it doesn't account for inflation, but also, more importantly, because it doesn't measure spending on services. There is an alternative measure of spending we can look at, which is this household survey data, which does include spending on services, does have a long history, and that has recovered to the pre-COVID trend. And then the final thing is to look at this GDP consumption as a percentage of GDP, where that also looks quite relative, like reasonable recovery relative to history. And there's still one thing to think about in terms of this sort of data and like the standard way of looking at China, if you like, which is savings. So savings have been rising, according to a lot of people. And if you look at the bank deposits numbers, like that's maybe the easiest illustration. So household savings in the banking sector have been increasing very quickly over the course of the last few years. So how can you possibly argue that consumption is okay if savings are going up? The problem here is that bank savings number reflects the way that people save rather than the amount of savings they're necessarily doing. So if you think about maybe you yourself as a household, right? How do you spend your money? How do you allocate your money? Some of it goes into consumption. So buying a camera or going to buy tea, right? Like spending out, so going on entertainment, going into a holiday. And then some of it you're using to save or to invest in the future. So that might be in bank deposits, but it might be in equities, or specifically in the Chinese case, it might well be in property. So obviously the big thing in China over the course of the last 30 years has been this massive reflation of the property market. How does the property market work in China? It's largely speaking, people going to buy new build property. So property bought off the plan, new apartments and flats that were bought before 2020, before the property market collapsed. Now, how does that affect people's savings? Because if I want to buy a property, I need to take money and give a deposit to a developer. So that money is essentially leaving my bank account, going into the bank account of the developer. Now, from my perspective, like I still have that money. And in many ways, that still is my savings, right? If I think about my household wealth is now tied up in that property, even though that money is no longer in my bank account. So what's happened since 2021? Well, that flow of money out of the banking sector from household savings into corporate deposits has stopped because now the property market has collapsed. Nobody wants to buy property anymore. That doesn't necessarily, so then bank savings go up in the household sector. But that doesn't necessarily mean I'm saving anymore. Like all it means is I've changed the way that I allocate my money. And again, we have lots of evidence of this. So we can look at the household survey, which in addition to looking at incomes in addition to looking at consumption, also looks at income. So we can work out the difference between the two, which is the savings rate. When we look at the savings ratio in China, it did increase a lot during COVID, but has come down to the level basically where it was pre-COVID, before COVID happened. So the fact that the savings ratio has been falling over the course of the last 12 to 18 months or so is one of the reasons why consumption has recovered, because that's obviously money coming back into the economy that is being used to spend. So there's some consistency in the data which suggests that consumption has recovered. We can also look at the PBC's household survey data, which again only goes up into the middle of last year, but it suggests a very similar thing, that the savings ratio for the household sector is basically now where it was before COVID hit. So there was an increase during COVID when the economy slowed down, people couldn't spend money, very worried about the future, but now there's been a normalization since. So again, in all of these different things, the data add up. Doesn't look like there's been an increase in the savings ratio. To the extent that bank deposits have increased, that's a change in the way that people save, not an increase in savings itself. And so when we look at all this data, it doesn't suggest at all that consumption is cyclically very weak in China. it suggests that consumption cyclically is back to where it was before COVID began. Now, as I said, I'm Paul Cavey, look at economics at a firm called East Asia Econ. If you're interested in any of this analysis, and particularly if you're an institutional investor, I'd be very happy to give you a subscription. If you're more interested in data and want to look at a lot of the charts and get some of the data I'm talking about here, go to the website eastasiaecon.com. There's a ton of charts, interactive charts on the site, which also the data can be downloaded. Now, I've talked about consumption today in a cyclical sense. In a couple of weeks, I'll come back and talk about what the implications of this change in the saving, in the way that people save, is having on the economy, and how to think about consumption in a structural sense going forward.